ಟ್ರೈ ಮಾಡ್ತಾಳೆ ಹೌದು ಒಂದು ಮೊಬೈಲ್ ನಂಬರ್ ಇಂದ 4 ಜನಕ್ಕೆ ಕೊಡೋದು.
Good evening, sir.
Good evening, Manish. Okay, good evening everyone. Welcome to the third week session of the TallyPrime. Okay, so today we will start with the topic of GST in TallyPrime. This session, this topic basically might take more than 3 to 4 sessions. It's quite a lengthy topic because we need to understand from the scratch. Okay, because that's one of the key capabilities of TallyPrime. Okay, so hope everyone is ready. Okay, let me just see. There are some 17 participants who have logged in. Should we wait for 2 more minutes or could we start?
You start, sir.
Okay, so let's start. So how many of you come under GST in your business? Can everyone type on chat if you are under GST, say yes or say no. Joy comes under GST. Suchitra, yes. KJ comes under GST. Raghu, yes. Shivu, yes. Deepika, yes. Chetan, okay. Varun, okay. Fine. So most of the participants who are there, GST is applicable for your business. Okay. So what is GST? What's the abbreviation of GST? Can anyone tell me what's the abbreviation of GST?
Goods and service tax.
Goods and services tax.
Yes.
Okay. Fine. So could everyone put on mute, please? Who's there? Chetan Goda, Raghu. Okay. So I just put everyone on mute. Okay. So the purpose of this training is to learn Prime, which will help in increasing efficiency in our business and elimination of duplication of work. So there's the objective, there's the purpose in which we are driving this. So goods and services tax, it's an indirect taxes, part of the indirect tax. Okay, so indirect tax means the tax is collected in form of indirect. Okay, so there are 2 types of taxes. One is direct tax and one is indirect taxes. Direct tax basically is your income tax or wealth tax, which comes under direct tax, where the end consumer is directly paying the taxes based on his income or based on the computed income to the government. When we talk of indirect taxes, the tax is paid to an authorized person of which has been authorized by the law. Okay, so we might not directly pay to government, we might pay to an authorized representative which has been identified by the government. Okay, so let us look at how that indirect tax, what does the key functionalities of indirect tax. Say example, I buy stationery at the shop. I pay GST on that. So am I paying GST to government? No, actually I'm paying it to the stationery business. He is supposed to pay to government. So my liability actually ends when I pay to him. Okay, but in direct taxes, I am not paying to anyone. I am directly paying to the government account. So that is one of the key differentiator. Okay, between direct tax and indirect tax. So you in indirect tax, either you are paying to government or you are paying to the representative of the government. But in direct tax, you are always paying directly to the government. Hope this is clear. Okay.
Sir, what is the example for a representative of the government, if you say?
Say example, you buy a furniture.
Yeah.
So the tax is charged at 12%.
Okay.
Okay, so you buy 10,000 worth of furniture and you pay 1,200 rupees as tax.
Okay.
Are you paying to government or are you paying to the furniture wala?
The shop wala.
Shop wala. He's an authorized person to collect the tax. That is indirectly you are paying. You are not paying to government account.
Okay.
On behalf of government, you are paying to an authorized representative.
So that means GST registered vendors.
Yes.
Okay.
All GST registered vendors are authorized representative to collect tax.
Okay.
Okay. Versus when you are paying an income tax, you don't pay to authorized representative. You are paying directly to the government account.
Understood. Understood.
And you are paying it on your personal income.
Understood.
Okay. So that's one of the key differentiators. There are a lot more differentiation. This is one of the things that you could remember basically. Okay. And GST is one nation, one tax, one market. Means, say example, I want to buy a bike. I want to buy a Hero Honda bike, which will cost 1 lakh rupees, and the tax charge is 28%. You go across India anywhere, the tax is 28%. Okay, so there is no change. If you are in Karnataka, it's at a different rate, or if you are in Tamil Nadu, it's at a different rate. No, nothing like that. Okay, so it is across the nation, across right from Jammu Kashmir till Kanyakumari, from your Gujarat, Kutch till the Assam border, it is the same percentage of tax it is charged on that specific product. Right? Okay. So it is one nation, one tax, one market. So it doesn't make any difference. Wherever you sell or wherever you buy, you end up paying the same percentage of tax. So it has become one market as such. So prior to GST, VAT was there, value added tax. Okay, so in that, different states used to charge different percentage of taxes for the same product. Example, if I take the same example here of Hero Honda bike, if Karnataka is charging 15%, Tamil Nadu would have charged 12%, or Kerala would have charged 30%, because the states used to decide on what is the tax that they need to charge. Okay, so in different states, the tax percentage was different prior to GST. After the introduction of GST, it has become one single tax for the given product across the nation. Okay. Then the GST actually got introduced on 1st of July 2017. So it's almost 4 years now. Okay, so another 1 month it completes 4 years. Okay, and GST has also gone through a lot of changes as such. Okay, it has gone through multiple changes. When GST was introduced in July 2017, okay, actually what it was, so there were a lot more indirect taxes. Okay, in terms of VAT or the central sales tax, which is CST, or excise, entertainment tax, or octroi, entry tax, luxury tax, you name it. There were some 17 different heads of taxes that the government used to charge. So on introduction of GST, all these taxes were abolished, and all these taxes were made to one single tax that is called as GST. So from a business perspective, the objective was to make it simpler. Okay, I don't know whether it has become simple or not, but the objective was to make it simpler for businesses. Okay, so currently we have this GST. And GST is a technology-led law with software as its interface. So what does it mean? It means that if you are a GST registered vendor, okay, and you want to operate, you need to use technology. Without technology, you cannot operate, you cannot maintain, you cannot operate your business without technology under GST. What it specifically means is government has stopped accepting manual papers to file your returns. You cannot go and file your GST returns taking your manual books of accounts on paper, okay, and file a GST returns. Government will not accept. There is no government office which will accept your manual handwritten documents. Everything has to be digitally maintained. You have to file your returns using technology. So technology plays a major role in GST. This is as part of the law. They have defined in the law itself, saying that manual records will not be accepted. It has to be through technology only. So irrespective, it doesn't matter whether you use Tally, whether you use Excel, whether you use SAP or Oracle or whichever software that is available, but it mandates you to use a software. Okay, so I can't say that I have registered for GST, but I don't have any technology in my office. I do everything manually, so I want to file it manually. You cannot file. There is no counter in the GST department who will accept your returns manually. Okay, so in that sense, technology becomes a very critical piece of GST. Okay, just to give you a background, was introduced in on July 1st, 2017. It's almost 4 years, another 1 month to go. It has replaced all indirect taxes. Okay, in terms of indirect taxes, currently it's only GST. It's applicable both on goods and services. Prior to GST, there was for goods there was a VAT, for services there was service tax. Two different taxes were there. Okay, on introduction of GST, both got abolished and it has become GST will take care of both goods and services. As I told you, it's a technology-led law. There's a continuous enhancement and changes introduced in GST. It's a continuous process. It will continue as of today. It's there. Another how many ever years that GST will be there, you will always find there are some enhancement, there are some changes, there are some new rules that has been introduced, and you have to be up with all those things as a business. Okay. One more thing, is GST applicable on all the items? Yes, most of the items GST is applicable, apart from electricity,
Agriculture.
fuel, and liquor. For these three products, electricity, fuel, and liquor, GST is not applicable. Yes, Shivu, petrol comes under fuel. Okay, petrol, diesel, all the fuels. Okay, petrol and diesel basically, it is exempted from GST. Liquor is exempted from GST. Electricity is exempted from GST. Okay, for these three things, the old law will still continue, like excise or customs or whatever the duties that the government is charging. Okay, so it will continue. Agriculture, Earlier also there was no tax. Currently also there is no tax. So it is not even included. Even in bad days, the agriculture was not taxed. Okay, farm income. When we talk of agriculture, it is farm income. Okay, so that was not there earlier also, and that's not there now. So agriculture is always left out. Okay, so any questions on this before we move forward? Is it clear? See, because this you need to have the basic understanding before we move. Are there any questions? Okay. Now, if you are clear on this, to further continue on GST, okay, you have to ask yourself two questions. One is, what is my turnover? Second is, what type of business I'm into? These two will determine how GST will be applicable for your business. Okay, so over a period of time, as I told you, the law has been enhanced, a lot of changes has been introduced. Okay, now the starting point that you need to ask is these two questions. What is my turnover? My organization turnover, what is my organization turnover? And what type of business I'm into? Say example, if I'm into, if I have a petrol bunk, I just sell only petrol and diesel. I need not register under GST because for petrol and diesel, GST is not applicable. So I need to know what type of business I'm into. And what is my turnover? So the turnover, there are some limits that has been put under GST. Okay, if you want to get registered under GST, first thing is your turnover should be minimum 40 lakhs. If your turnover is less than 40 lakhs, you need not even register. You could still continue to do business without registering to GST. Second question is, okay, I have crossed 30 lakhs. Next, have I crossed 5 crores of my turnover? So if I have crossed 5 crores of my turnover, then I fall under monthly return scheme. If my turnover is less than 5 crores a year, I can opt to file my returns on quarterly basis and pay tax on monthly basis. So turnover is very important. And if my turnover is more than 100 crores, I come under e-invoicing where every invoice has to be uploaded on the e-invoice portal as and when I generate, even before moving the goods out of my business. So there are a lot of law that is applicable. So major thing is just ask these two questions: my turnover and my business type. Okay, Shivu is saying, sir, it's 20 lakhs for compulsory GST registration. Okay, fine. I think from 40 lakhs they have reduced to 20 lakhs. Is it Shivu? Have they reduced to 20 lakhs? From when? Sorry, I'm not updated with it. Shivu is saying it's reduced to 20 lakhs. Okay, let me just update. Okay, fine. So just remember, even if it is 20 lakhs, it's fine. Okay, so less than 20 lakhs, you need not register. Okay, so Venkana Shetty is saying, no, it's 40 lakhs only. So there is some confusion because my understanding was also 40 lakhs. Fine, let us keep this point. Okay, let us go back, see that and get the confirmation. Okay, but my understanding currently it's 40 lakhs. Okay. Fine. So once when we get an answer to these two questions, Okay, it will determine the frequency and type of return filing. So what's the turnover of my business in the previous financial year? If it is less than 5 crores or up to 5 crores or above 5 crores. Up to 5 crores, we can opt to file quarterly returns or monthly returns. Okay, so as a business, I can opt to follow either quarterly or monthly, but I need to pay taxes on a monthly basis, irrespective whether I file quarterly or monthly, it doesn't matter. I need to compute the tax and pay the tax on monthly. Okay. If it is more than 5 crores, there is no option available. I have to file on a monthly basis only. Okay, so in this group, how many of you have less than 5 crores? Can you just type less than 5 crores on your chat? How many of you fall under less than 5 crores? Bijoy is less than 5 crores, Raghu is less than 5 crores, Umesh less than 5 crores. Okay. Narendra is more than 5 crores. Okay. Fine. So we have combination of both. So there are few businesses who have less than 5 crores. There are few businesses who have more than 5 crores. Okay. Okay. So next, let us look at some of the features of up to 5 crores, and then let us look at more than 5. So if it is 5 crores or less, you can opt for quarterly returns and monthly tax payment. Monthly payment via payment declaration. You can declare and make the payment. Okay, so who will all be eligible for this? Business who deals with only consumers, where your billing is only B2C, business to consumer. Example, if I say I'm into stationery retail and I don't have any business to business sale, all my sales are over the counter, then I'm into consumer sales. Example, I have a provision stores. I just sell to consumers who come to my store, who walk into my store. Okay, and everything is basically an end consumer sales. Okay, then they qualify for it. So like that, all consumers, all B2C billing, if I'm only into B2C billing, all those consumer, okay, comes under quarterly file. So what kind of forms do they file? It is called Sahaj. Return's name is called Sahaj, where there are only consumers. So if you have a combination of consumer and business, you have both B2B invoices and B2C invoices. That is business to business invoice and business to consumer invoice. Then you need to file returns called Sugam. Okay, that's the returns. Then the third is basically you have B2C, you have B2B, and you also have exports or sale to an SEZ, or you're into e-commerce. Okay, where you do an business through the e-com portals, then you need to file return one, which is normal quarterly returns, even though your turnover is less than 5 crores. Okay, if you have exports or you sell to an SEZ or you have an e-commerce platforms, you deal in e-commerce platforms, you sell through this thing, then you need to file normal quarterly returns, which is return one. Is this clear? So there is one more condition. If you are filing under Sahaj and Sugam, basically which means you are selling either only to consumers or consumers and business, and you have opted for Sahaj or Sugam, then you cannot make supplies through e-commerce portal. So you cannot sell through that e-com portal. Okay, then provisional credit cannot be taken on missing invoices under Sahaj and Sugam. So this we will discuss. Okay, just park this. Okay, there is something called input tax credit. You need to arrive at what is the credit that is available. Various things are there. Basically, what it says is, if you are opting for Sahaj or Sugam, okay, and if your supplier has not filed his GSTR1, which is typically a missing invoice for you, you cannot take the credit. Provisional credit is what the rule says. Then taxpayer opting for Sahaj or Sugam need not declare exempted supplies. Okay, so if there are any exempted goods, you need not declare those things. Okay, if you are filing Sahaj or Sugam. So there are certain uh, exemptions or certain rules that you need to follow if you opt for Sahaj or Sugam. Right? Then let us look at the businesses who have more than 5 crores of turnover, above 5 crores. They don't have any option. They have to file monthly returns only. Okay, so it doesn't matter if their turnover has gone above 5 crores, whether they are only consumers or consumers and B2B and B2C, consumers and businesses, or they are operating on e-com portal or SEZ, they are selling to SEZ, all those things, it doesn't matter. If the turnover crosses 5 crores, they will automatically move to monthly returns. They are supposed to file monthly returns and make payments and file monthly returns. And they need to follow normal monthly returns only. And businesses with turnover up to 5 crores can also choose normal returns. Means, as I told you earlier, less than 5 crores can opt either to file quarterly returns or follow monthly returns. It is the option that they can exercise. But for more than 5 crores, they don't have any options. They have to file on monthly returns only. Is this clear? Are there any questions on this before we move? I'll just give 30 seconds time. If anyone has any questions, either you could chat or you could unmute and ask the question. Okay, so let's move forward. Okay, so with this basic understanding, okay, now let us move on to Tally and see how do we configure all this, right? So let's do one thing. Let us open Tally and start creating a company, enabling the GST, all those things that we will do. Could we start with Tally? Okay. So as usual, we'll open a company. Okay. So let me just start with a new company. I'll just say create company. I'm just naming the company itself as MCS GST training. See, as you enable GST, okay, a lot of things will become mandatory for you, like address, state, various things. Say like address, give the actual address because this is what gets printed on your invoice reports and everything. Number 116/1, first floor, 11 cross, Malleshwaram, Bengaluru, Karnataka. State, select the state. Okay, then pin code, give the pin code. Okay, telephone number, again this is optional. Anyhow, I'm updating it. Email, accounts.medhacs@gmail.com, cs.in. Okay, so from when the financial year begins from? 1st April 2021. Accept? Yes, I've accepted. Okay, now maintain accounts. This is the F11 capabilities which is asking. Yes, I want to maintain accounts. I want to maintain bill wise. I want to maintain inventory. I want to integrate it in inventory. Then enable GST. Yes, I want to enable GST. Now, once when I enable GST, it's asking which state I belong to. Then there is one more thing in GST called type of registration. When I register under GST, either I could opt to be a composition dealer or a regular dealer. So what's the difference between composition dealer and a regular dealer? So if my turnover is less than, I think 1.5, I think it is 1.5 crores. If I'm right, okay, I'm not very sure. I'll revert back to you. Okay, if it is less than 1.5 crores, I can opt to be a composition dealer. Means what? What is the meaning of composition dealer? The meaning of composition dealer is very simple. I need not maintain the proper books of accounts. I need to declare my sales and pay a percentage of turnover as tax. Example, if I am a trader, I need to pay 1% of my turnover. And if I am a manufacturer, I need to pay, I think, 2% of my turnover as GST. And I need not maintain any other records. But one critical element if I am under composition is I cannot claim input tax credit. So when I make a purchase, if there is an input tax that is being collected on the purchase, I cannot claim that as my input tax credit. That I need to observe as my cost. Okay, so who might come under composition dealer? For which kind of business composition dealer will be very helpful? Typically, who is buying from an unregistered dealer and who is selling to an end consumer. For them, composition registration might be very helpful because when they are buying from an unregistered dealer, there is no tax. He cannot charge any tax. And you are selling to an end consumer, End consumer doesn't also needs any tax. Okay, so only in restricted business scenarios, this will become very, very helpful. Construction, I'm not very sure, Nagendra, because in construction, there are a lot of regular businesses that happen. Say example, cement, steel, okay, which are major construction raw materials basically. Of course, I understand sand today you might even get with an unregistered dealer, okay, but construction, the cost of input is very high. Say example, if you take for paints and all, paints, even for cement, the tax is 28%. Okay, so for building construction, I don't think it will be a this thing. Small hotels and eateries, yes, because they buy most of the products from an unregistered dealer and they are selling it to an end consumer. Only for limited kind of businesses this will help, and also their turnover should be less than 1.5 crores. If they go beyond 1.5 crores, they have to move to a regular. Yes, you can. Bijoy is asking a question, can we change to regular anytime? See, if you have opted for composition, okay, and if your turnover crosses the limit of 1.5 crores, you will move automatically. Else, you can change from composition to regular at the start of the financial year. In between the financial year, you cannot opt until unless your turnover has crossed 1.5 crores. Okay, so in Tally, you need to specify what kind of registration you have. Example here, I am taking as regular. Assessee of other territory, no. From when GST is applicable, since my books starts from 1st of April 21, I am taking this. Then GST number 29 AGYPM 02570-1Z2. So you need to understand here, 29 is the state code. Karnataka state code is 29. Okay, so every state has a particular code. Okay, so you could go to Google, search for GST state codes, you will get the complete list. Okay, so 29 starts for Karnataka. Then next 10 digits is the PAN number under which the business is registered. Okay, so my PAN number is that 29 AGYPM 0257D 1Z2. Last three characters depends on various other things like number of units that you have registered, business locations you have registered, what type of business entity you are into. Okay, all those things, that combination is what it takes. So it is a 15 character. GST number is a 15 character. First two character represents state code. Next 10 character represents the GST number, and last three character represents number of locations, that is the business units registered, locations registered, then type of business, various things, that the combination which it takes. Then periodicity of filing. As I told you, when you are regular, okay, you could opt to file on a quarterly basis if your turnover is less than 5 crores, or monthly basis. And if your turnover is more than 5 crores, you have to mandatorily file on a monthly basis. Okay, is this fine? Okay. So the next comes GST rate details. So here you need to be a little, you need to have a little understanding. Tally is a highly flexible software which can adapt to most of the business requirements. When I say most of the requirements, any kind of businesses can use Tally to maintain their GST returns, maintain their books of accounts and everything. So Tally also handles different business scenarios with respect to GST. Okay. Let me take an example of one small business. Say example, I'm into a let me just say I'm into cement trading. Okay. I'm a cement trader. So I have only two items which I sell. One is cement 50 kg bags, then white cement 5 kg bags. I just deal with only these two items. Okay. And both, so when we talk of the item, okay, so the item will also have something called HSN code. Okay. Then it will have a tax percentage, GST tax percentage. So how much of tax has to be charged? Okay, so example, I'll say the HSN code for cement is 58123489. I'm just giving. Okay, so the GST HSN code maximum number of characters that is available is 8. Okay, and again based on the turnover, either you can quote only 4 digits or 6 digits or 8 digits. Different turnover has different mandatory numbers, mandatory that number of digits that they need to quote. Okay, and example, cement is charged at 28%. And white cement also falls under same HSN code and same percentage. So I deal with only two items. I don't deal with any other items. This is scenario 1. Okay, if this is the scenario, a small business who is just dealing with only one cement as the product, he could also use Tally. In that case, he could configure the GST details in F11 itself rather than going and configuring at the item level, ledger level, various levels. Okay. So example, I'll just take this. I'll just show it to you. At the company level, I'm just specifying all the products under this company, okay, is only on this HSN code and it is charged at 28%, taxable at 28%. So at the company level, I could set up the GST details. Or if I deal with different items with different percentage, then I cannot have at the company level, then I need to have either at the ledger level or the stock item level. Okay, so Tally handles everything. Is that clear? So example, I'll just show you. Let me take the cement as an example and show you how you could configure this. Enable tax liability on advance receipts, currently not applicable. Tax on reverse charges if you are purchasing from the unregistered dealer. Okay, there is a certain rule. When you are purchasing the material from an unregistered dealer, he cannot charge the GST because he is not a registered dealer. So he cannot charge GST. But since you are a registered dealer and you are buying from an unregistered dealer, you have to calculate tax on that purchase and pay in form of reverse charge. Okay, so there is a law. I'll just explain you when we look at the unregistered dealer purchases. Okay, so currently I'll just say no to this. Okay, we'll come back to that. GST classification. If you want to have the advanced classification, this again we'll deal this later. Then LUT or bond details. Say example, if you are selling to a SEZ, that is special economic zones, or if you are exporting, okay, you need to register and and in GST under LUT and take the registration details for LUT bonds. And you need to code those in your invoice and reports. So if you have that, you could enable that. Okay, else you can make it as no, not applicable. Okay, then comes e-way bill. Is e-way bill applicable if you are dealing with goods and if your individual tax invoice is more than 50,000 rupees? E-way bill is mandatorily applicable and you need to generate e-way bill mandatorily. So it's asking whether is it applicable. Yes, it is applicable. Then from what date it is applicable? Okay, it starts from 1st of April. Then what is the threshold limit includes? Is it the invoice value, tax and exempted goods value, or taxable goods value? Means, example, I have my invoice value at 40,000 and tax charge is 28%. So 14,000 is tax, 28% on 40,000. So my invoice value became 56,000. Now in this case, against which it is applicable? When I say invoice value is 56,000. Okay, if you take the third option, which is taxable goods value, it is 40,000 because on 40 there is 14,000 to be tax. So this will not be applicable if I take 50,000 as this thing. So on what you need to charge, and taxable plus exempted goods. Say like example, you are selling 40,000 worth cement and there is one exempted goods also you are selling. Say example, you also deal with rice, raw rice that is not taxed, or you are dealing with ragi, raw ragi, it is not taxed. So that becomes an exempted goods. So if you are billing 40,000 rupee of cement and 25,000 rupee of ragi, the total taxable sale on the invoice is 65. Okay, so accordingly, it is giving you an option when you say invoice value of threshold limit, what it should include. Okay, generally, you can just take as invoice value irrespective. If the invoice value crosses 50,000, e-way bill should be applicable. So here again, you could specify the threshold limit. Currently, it is 50,000. Tomorrow, if the government changes to 1 lakh, you could come and change here to 1 lakh. So automatically it will work. Then, is it applicable for intrastate? Means e-way bill in case of interstate, it is default applicable. If it is within state and if the invoice value is more than 50,000, it is applicable. Else, it is optional. Say example, I'm selling to a customer who is sitting in Hubli and the invoice value is 25,000 rupees or 49,000 rupees. Okay, generation of e-way bill is not mandatory, it's an optional. I can opt to generate a bill or not. Okay, then comes e-invoicing. As of today, if the business turnover is more than 100 crores, e-invoicing is mandatorily applicable. So, is there any businesses who are part of this training who has more than 100 crores of turnover? Does anyone have more than 100 crores of turnover? I don't think. Okay, but anyhow, okay, we can show it to you how to generate an e-way bill. Okay, so I don't think for any of the participants this will be applicable. No problem. Accept. So I've just accepted this, the GST configuration. Okay, now I'm ready with my books of accounts. So what is the example we have taken? We are a cement dealer. We are just dealing with only these two items. Okay. Then before we actually get into it, Okay, let me just give you an insight of what kind of taxes are charged and what is the head of taxes that you are supposed to. See, there are two kinds of taxes. One is, as a business, I am collecting tax. I am collecting GST. When will I collect GST? When I sell a goods or services, I am collecting GST, right? Next, I am paying GST. When I am paying GST, when I buy goods or services from registered GST dealer. Okay, this is when I am paying GST. If I am buying from an unregistered dealer, I am not paying any GST. But when will I collect GST? I am collecting GST on all the invoice, whether I sell it to a registered dealer or an unregistered dealer or a consumer, it doesn't matter. When I'm selling, if I'm a registered dealer, I have to collect GST. But when I'm buying, I'm paying GST only if I purchase from a registered dealer. If I'm purchasing from an unregistered dealer, I'm not paying GST at that point of time. Okay. So this is one basic understanding you need to have. Then, what are all the rates under which GST is charged? Okay, one, there is exempt goods where GST is nil. Then there is nil rated goods. Again, here also GST is nil. Then there is 5% goods where GST charge is 5%. Then there are 12% goods where GST charge is 12%. Then there is 18% goods and services where the GST charge is 18%, and there is 28% goods where GST charge is 28%, and over and above this there is something called sin goods where additional cess is charged. What are sin goods? Sin goods are nothing but where government doesn't want to promote it, but they don't have a choice. Example, cigarettes. Okay, so everyone knows that cigarette is injurious to health. Even government knows that. So government doesn't want to promote it. So what they do is first they charge 28% tax. On that they charge additional cess. Okay. And all services are charged at 18%. Any service for that matter, it is charged at 18%. Okay. So now if you look at how do we know which goods is charged under which percentage? It's very simple. When you are, so there are three kinds of businesses, as I told you. One, there is purely a service business. Okay. So for them, any sale is at 18% because it's a service that they provide. Okay. The second is traders. What does trader do? Trader is buying a material and selling that material. So when he's buying a material, his supplier is charging him some tax. So on the purchase bill, there is a HSN code and there is a tax rate. Okay. So you could go and verify that, or you could go to the GST portal and verify what is the tax that needs to be charged. Okay. Then, if you are a manufacturer and a trader, so you are selling the finished goods. So when you are selling the finished goods, you should actually know under what tax it comes. So then you need to refer your GST law. Okay. So I have a file I'll be sharing with you. Okay. So you could just keep that for reference. Okay. Or you could just go to GST portal and find out the HSN codes and every detail of that. One sec, just hold on. I think I have that in my mail. Okay, I can just show it to you, and anyhow, I'll be sharing that file. The latest HSN and SAC codes. Yeah. HSN codes under GST. So this is one big file. Okay. So this you could, I will share this file with all of you. Okay, you could keep this as a reference. But anyhow, okay, regularly you need to also check the GST portal to understand what is the HSN code and what is the description of that, and at what percentage it is charged. You could go and download this file. Okay, from the GST portal also it's available. Okay, so this I'll be sharing with you. Okay, so you could cross refer that. Right now, okay, one more thing that you need to be aware is when you are selling and buying and selling. Okay, so there is something called intrastate sales and purchase. Then there is something called interstate sales and purchase. Then there is called something called import and export. So there are three kinds of different types of transactions that you could have. One is it is intrastate purchase and sales. What does that intrastate purchase and sale mean? Intrastate refers to where both buyer and seller is in the same state. This is called intrastate purchase or sale. In case buyer and seller is not from the same state, where buyer is from, example, buyer is from Karnataka, seller is from Tamil Nadu, then it becomes an interstate transaction. Import or export is where buyer or seller is outside India. Either buyer or seller is outside India, then it is called import or export. In case of intrastate sale and purchase, the tax charge is CGST, that is Central Goods and Service Tax, and SGST. If it is an intrastate purchase or sale, the tax charged is Central Goods and Service Tax and State Goods and Service Tax. Okay. In case of interstate sales and purchase, where buyer and seller is not from the same state, buyer is in Karnataka, seller is in Tamil Nadu, or seller is in Karnataka, buyer is in Maharashtra. In that case, where the transaction is of interstate in nature, then the tax charge is under IGST head, that is integrated GST. And in case of imports or export, where either the buyer or the seller is outside India, even in that case, the tax charge is integrated GST. Okay. So in case of intrastate, the tax, which the percentage of tax, like example, if the percentage of tax is 28, half of it is goes to central GST and other half goes to state GST. Means if I am a cement dealer sitting in Bangalore, selling to a person who is in Bangalore, which is typically a intrastate sale, a cement which is charged at 28%. Example, if a buyer is buying from me worth 10,000 rupees of cement, and I'm supposed to charge 28% tax, which comes to 2,800 rupee tax, half of it will go to central government, that is CGST. So 1,400 rupees goes to central government, 1,400 goes to Karnataka state government, that is SGST. So equally it is divided, half of it goes to central government, half of it goes to state government. So you are supposed to break the tax into two heads, one under CGST head and one under SGST head. But when it comes to interstate transaction, the complete 28%, so like example, I am sitting in Bangalore, I am selling a cement to somebody who is sitting in Hosur, which is in Tamil Nadu. Now the tax in the same example, 10,000 rupees, the value of the material, 2,800 is the tax. The complete 2,800 is charged under IGST head, that is called integrated GST. Means it's an integration of two different states. So who has to get the credit? In this case, which state will get the credit? If a buyer is sitting in Tamil Nadu and seller is sitting in Karnataka, which state will get the credit? Can anyone tell me? Any guess? There are only two states. Either Karnataka should get or Tamil Nadu should get.
Tamil Nadu will get the credit, sir.
Tamil Nadu will get the credit. Why Tamil Nadu?
Because sorry, buyer is in Karnataka, right?
No, buyer is in Tamil Nadu.
Yeah,
seller is in Karnataka.
seller is in Karnataka.
I am selling sitting in Bangalore.
Okay.
To a person who is in Hosur. So it's an interstate. Okay.
Okay.
So in interstate, which state gets the credit? Which state gets the tax benefit?
Tamil Nadu, sir.
Why?
Because I'm selling the goods here, but buyer is in Tamil Nadu.
Correct. So why
Once
Tamil Nadu?
I pay the
No,
tax.
Tamil Nadu is correct. But why Tamil Nadu is my question.
Yeah. Because I'm paying the tax to the buyer in Bangalore. He is returning the tax, right?
So what? Why Karnataka is denied? I'm sitting in Bangalore, right? I'm selling from Bangalore. I'm a seller sitting in Bangalore. You are a buyer who you are sitting in Tamil Nadu. So why will Karnataka keep quiet?
always to the customer, right?
Huh?
Customer.
No,
states
okay, customer. So customer will pay to, ultimately customer cannot keep in his pocket. No, he has to pay to government.
No, customer states benefit.
Customer takes benefit, fine, but customer has to pay when he files the return.
No, customer state.
Huh?
Customer state. That means, how can I say? Okay, I'll wait.
Okay. See, Tamil Nadu is the right answer, but I'm asking why Tamil Nadu? Why not Karnataka?
The Tamil Nadu will pay the GST. Hello?
Yeah. I'm listening.
They'll pay the GST, then they'll take input credits.
Okay. So, GST is a consumption-based tax design. Means whichever state is consuming, that state will get the benefit. So in this example, the seller is sitting in Bangalore, the buyer is sitting in Tamil Nadu. So Tamil Nadu is consuming it. So the law says the consumption state gets the benefit. Okay. So that was one of the reason why the very industrialized states like Maharashtra, Karnataka, Tamil Nadu were actually opposing GST. See, understand. I am a manufacturer sitting in Hubli. I am manufacturing a car. Okay. But I am not selling in Karnataka. I am selling all the cars in Delhi. All my customers are in outside Karnataka. So who is consuming the car? Karnataka is not consuming the car. Outside states are consuming the car. So the benefit of GST goes to the state which is consuming. So what did Karnataka get? Karnataka doesn't get anything because I'm not consuming. So typically when the GST was introduced, states like Bihar, Uttar Pradesh, Madhya Pradesh, a large state where the consumption are very, very high, started getting more advantages, more benefits, though they were not manufacturing. For example, if you take Uttar Pradesh, their highest revenue comes from agriculture, but agriculture is zero tax. They don't have tax on agriculture. But the consumption is very high. The Uttar Pradesh has more than, I think, some 20 crores population. They have some 79 districts. Karnataka has some 31 districts. So it's 2.5 times of Karnataka. So the consumption is very high. So what they do is once when they start consuming, they don't produce anything. They get everything from other states. Okay. So they started getting benefit. But one way it is good because it allows development to happen across all the states. Earlier, what used to happen is most of the businesses or the manufacturers who want to set up their business used to choose only 2-3 different states like Maharashtra, Karnataka, Tamil Nadu, Telangana, like that. Because they used to say, we get good manpower here. Okay, we get water facilities here. We get electricity here. We get a lot of exemptions here and everything. So, since businesses were not ready to explore the untapped states, they remained backward. Now, with the introduction of GST, that is the reason it is told as one nation, one tax. Means today it doesn't matter whether you are set up a factory in Bangalore or whether you set up a factory in Azamgarh in Uttar Pradesh. You get the same benefit. because tax charge is the same across. Right? So this is some of the basic things that you need to have an understanding before we actually get into how to handle GST in Tally. Is this things clear? Any questions on this? Okay. So let's move on with our presentation. So I think we completed this. How to set up a company. Okay, how to set up GST configuration. So in this given example, we have just taken one item with 1% at the company level. Right? The next thing that you need to be little clear is some of the key configurations in GST. One is the inventory management. Okay, then unit of measures. How do you update the Hsn code? What is the tax rate? Then ledger configuration. When you come to ledger configuration, purchase ledgers, expense ledger, sales ledger, income ledger, then customers and suppliers ledger, then GST tax ledgers. These are critical configurations that you need to understand to ensure that you generate an error-free GST invoice and error-free GST returns out of Tally. Right? So there is a question which is being asked by Narendra, is asking why it is called IGST. It is an integrated GST. I stands for integrated, means it's an integration of two states. So example, let me take, it depends on who gets the credit ultimately. Okay, every state, the central government is worried about how much money I get out of this transaction. Please understand that. Okay, so now example, let me take the same example of 10,000 rupee cement. Okay, where the buyer is in Hubli, the seller is in Bangalore. 2,800 rupees, right? The tax portion on 10,000 rupee at 28%. Since the buyer and seller is both are in Karnataka, half of the tax goes to central government, half of the tax is in state government. It goes to state government account. So 1,400 goes to central government, 1,400 comes to state government. Now the same transaction, buyer is sitting in Pune, seller is sitting in Bangalore. Same 10,000 rupee transaction at 28%. Now since there are two states which is involved, Karnataka and Maharashtra, because the input tax is taken at the Karnataka, but when he's selling to a Pune customer and there is an IGST, means there are two states which is involved. So since two states are involved, to simplify the business problem, what they are saying is charge at one head called IGST. At the end of the month or at the end of the quarter, GST will compute and say how much money. See, example, this 2,800, what we have charged for IGST. Who has to get this money? Maharashtra has to get this money. Will Maharashtra get full money? No, they don't get full money. They get only half of that money. And other half will go to central government. See, for central government, irrespective whether it is a local sales, intra-state or interstate transaction, central government gets 50% of the tax share. The question is, who will get the other 50%? Okay, so what they have done is, if it is an interstate tax, interstate sales or purchase, what government has told is charge under one head called IGST. Deposit to that IGST account that is managed by central government. Then at the end of the month, central government will compute and say which state should get how much of tax benefit, and they will transfer. I hope everyone is following some of the GST news, and if you look at since last 3-4 months, government is transferring every week some few thousands of rupees to every state, saying that it is the GST amount, and GST amount. Have you noticed that? That is coming from the computation of IGST, which central government had retained the transaction value, tax value. Now they are releasing on weekly basis. So it's for business, though it is simple, for government it is not that simple. It's a very complicated calculations that they do in the back end. Okay, so the reason why it is called as IGST is it's an integrated tax because two different states are involved. Hope it's clear.
Yes, sir. Thank you, sir.
Okay. So let's do one thing. Let us break at this. Tomorrow, let us look at how do we configure all this and make a purchase and sale invoice in Tally and generate GST returns. Okay, so it's 8:15 now. I was thinking that we should be able to complete this, but no, it's taking more time. Not a problem. Okay, and we'll continue this with tomorrow. Okay. So are there any questions? This is the time to ask if you have any questions on today's topic. Okay, so if you don't have any questions, okay, I request each one of you, if you could just give your feedback through a video message or a voice message. Voice message is also fine. If you can just give your feedback, record your voice and share it on the WhatsApp group. Okay, we'll be happy to receive your feedback. Okay, and those who wanted to take the assessment, I'm sorry I was not able to share the assessment paper. Okay, probably by tomorrow I'll share. I had some medical emergency, so weekend I was not available. So just excuse me, max by tomorrow morning I'll share this assessment paper with you for the last week. Okay, so if there are no questions, you can log off. I'll wait for another 1 minute. If there are any questions, please let us know. Okay, we'll answer your queries. Okay, thank you. Thanks everyone.
Thank you, sir.
Thank you. Good night.
Good night, sir.
Good night.